The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another gorgeous day at the headquarters of Technical Trading and Investing. It is TFNN.com. And we're having just a gorgeous day down here in the headquarters, which is in Tampa, Florida. It is sunny and 80. And I have my favorite Sun iced tea brewing outside. And when the show's over, it should be ready to go. And we'll be having a great day, sipping a little iced tea and figuring out that it is time to get some of those chaise lounges and hit the beach. But I know many people are still locked up in there in the frigid Arctic North, probably farther up than the 39th parallel. But it is nice, and if you get a little claustrophobic, come on down, spend your money. Make sure that you stay in a hotel and pay our wonderful visitors tax so that we don't have to pay any state income tax down here in the state of Florida. Our tourists pay for it. So come and visit. Do not stay. And head back up and drop some coin down here for us. We always enjoy it. It's sunny here, and we're just outside of Tampa. Of course, I'm locked in the trading bunker, 10 stories below the surface, down here in somewhere close to Tampa, in an old abandoned Atlas missile silo, if you believe that, and you shouldn't. But we are having an interesting day out here. Yesterday during my show, we talked about closing many of the shorts I had on, and I think probably a good decision. We'll be talking a little bit more about a few of those. At the moment, we are up a bit at 1752. Is that right? Let me make sure that this is all 1752, which is up almost 11 points on the S&P cash. We got to a high of 1758. Which is about 5.5 points higher than we're at right now. 2.5 billion shares, so the volume is decent, at least to start off our show. We'll see how it develops over the next hour. But nice little respite from the down move, and I suspect we'll get into where I think the market is going and how long it's going to get there. Market certainly went down a little faster than I thought it would. I thought we'd probably frog boil most traders down to the 1670 level in the S&P cash. It just happened a little bit too fast, and a few of those frogs jumped out of the boiling water, turned up the temperature just a little bit too much. But we'll talk about why I started to cover later in the show. Today in history, in 1994, without any warning, and just as investors are pouring billions of dollars into bonds, the Federal Reserve raises short-term interest rates for the first time in 5 years. And by the year end, the Fed has hiked short-term rates by 2.5%, and the Treasury bonds lose 7.8%, the worst return since 1967. And that was a little bit of what I was thinking, is that we're probably going to see some action, either even tangentially, from the Fed. We've got Janet Yellen appearing in front of the Congress next week, and I suspect that she'll want this cleaned up before she gets in there, and then she's got a good another 3 months before she has to come before them, so she'll make everything all roses and light probably into next week, and that goes into a little bit of what I'm thinking. We'll talk, like I said, a little bit more about that as we get knee-deep into the show. Of course, we talked about this on Friday's show with Tom O'Brien. We do have a new CEO at Microsoft. His name is Satya, and I met him a couple of times in the 90s. He's been around forever. I think he started actually in the late 80s, maybe 88. Ran into a few times, always knee-deep in the enterprise part of the business, always knee-deep in trying to get what businesses wanted into their hands. Not much of one to be in the consumer side of the marketplace or selling Windows OSs or anything like that to consumer, or working with Dell. He's going to be an interesting guy, but looks like, at least from Microsoft's perspective, the people on the board, they wanted somebody that was truly on the business side and not so much on the consumer side of the business. They certainly have that guy. Am I impressed? No. Am I depressed? No. It's just an okay. It's the old safe bet. He's okay. He won't be a hero. He won't be a zero. And I think they wanted somebody that they could at least control a little bit, especially from the board level. The question will be just how long it is before he gains his wings and is able to push them around a little bit. We talked about this in the den late yesterday afternoon, but Dell is looking to fire 15,000 people this week. Could be coming out any minute. They're going to get generous exit packages, but still 10% or more of its workforce is going to find that they are unemployed by the end of the week. They're going to get 2 months severance plus another week for each year that they've worked there, plus packages to help them find new jobs. Certainly, we don't need a amnesty bill that adds huge amounts of people coming in from the other country. There's going to be a huge amount of people that need to find work over the next couple of months, especially in that field of computer support, especially as heavily as this is going to be falling around the Austin, Texas, and Dallas, Texas areas. But, of course, Dell was in a huge hurry to become private so they could do as much of this out of the public eye where people were going to be yelling and screaming. But certainly the first part of right-sizing Dell has started, and look for that to creep into the general unemployment numbers as we go forward. So that'll be it. Radio Shack is going to be closing about 500 stores. The Wall Street Journal is reporting people familiar with the matter. It's unclear which of Radio Shack's roughly 4,500 stores will be closed. They've already closed a great deal of those, about 1,000 over the last year. They're going to close yet another 500 stores. We said that this is kind of an interesting play if someone wanted to actually jump in and buy Radio Shack, RSH. This actually had a very good looking low that I brought up again during the Tom O'Brien show a few weeks back. And I said, what you really wanted to watch if someone was starting to come back in here. The reason I was looking at this was the July 11th low at $2.18. It had 24 million shares. It went below that with very light volume over those 2 or 3 days. I said you wanted to see whether someone came in and bought that. And, of course, as it popped back into the trading range at 218, it certainly got there. And been kind of bouncing around, pulling back a little bit on the store closure news today. But $2 to 268, not a bad trading range out there. I would have probably taken that money on the close, which would have been, what, that's not it. It's that. And what was that high that day? Hang on just a second. 262. So yeah, $2 to 250. Wouldn't have been a bad, or 260 wouldn't have been a bad trade out there. But I digress. And of course, we've won so many awards for digressing on the show that it's hard to count. Yesterday, we talked a little bit about Netflix. Someone, I think he called in. And I said the big problem was that they were going to have to finance expansion through Europe. Netflix announced today that it would raise $400 million selling senior notes through 2024. And the funds acquired from this offering would help it expand overseas to make more investments in creating original content, according to Variety. So that money, just isn't from money heaven. They actually have to spend it and pay it back. But pretty interesting to see that they were able to get huge concessions and 10 years to pay that back off. But again, one day we're going to see the real books in Netflix and see exactly what's going on in that company. At the moment, they are flat. They got down to a low of $3.97 earlier this morning, but pretty much flat out here today. And one of the reasons I covered my shorts yesterday, which we'll talk about again in a minute. One of the shorts I did have was from the Art of Timing the Trade Charts scan at night. And hopefully everybody now knows what to look for in the Art of Timing the Trade Charts. This one jumped right out at me the night it came out. And that was Cooper Companies. COO was the symbol. And if you're noticing, I'll move my mouse around on it. This is just a picture, not the charts. I wanted to make sure I had exactly what I wanted to show you guys. Thing came down on huge volume from the X to A legs, and of course did just about perfectly what you expect a Gartley pattern to do in a bearish Gartley. The leg from the C to D leg coming back up had half the energy of the leg coming down the X to A. So we love that. It came right back up pretty much and tried to fill most of that heavy gap down. That heavy gap down came with, about 2.5 million shares? I can't remember right now. Got back into it with 500,000 shares as it made the D point. We were short this thing, I think 120, I think 129, something like that. And it came back down. Now, I closed the trade yesterday for another reason, and that was that it went right back in and made yet another bullish butterfly right out of that pattern. And it's not uncommon to see these things link from one Gartley to another. It doesn't happen all the time. But maybe, 10, 15% of the time. And it was good enough to give me the actual number where I should cover this. And it looks like I probably did a fairly good job yesterday in at least pulling the ripcord on this one. But an excellent ABC and, of course, 128 expansion all the way down to the D point, and 117.08 it got, or 117.07 was the calculation for the low D point. It hit 116.94 this morning, but I didn't wait. I closed at the close yesterday. We're going to get into Boeing in just a minute and why I covered my shorts. We'll be back in a minute. Give me a call, 877-927-6648.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. And of course, they can't quit but playing music that only is listened to by people that have sniffed way too much glue. I don't know why they picked my show to play all the flotsam and jetsam, but they certainly do. Thank God most of you don't have to listen to the pre-music between the top of the hour and when the show starts. I think most of you would have ears that you just you probably want to get a sharp pin and poke them or something. Anyway, we're going to go right to Lee in Riverview. He wants to talk about the S&Ps. How you doing today, Lee?
Good. Yourself?
Another excellent day in 80-degree temperature and sunny out on the patio. I'm living in tall cotton, as they say.
Good. Thanks for taking the call. Hey, my question is, I am in the S&P in my 401k, and I'm looking to potentially transfer that into cash in the next few days. Mm-hmm. And wondering if you would go ahead and do that today, or do you think what are the probabilities of continuing the little bounce that started today?
I think we're probably moving back up to 1780. I was going to get into why I covered my shorts yesterday, but I think what we have is a move where we're going to probably see the market stumble back up to somewhere around the 780 level. Hang on. Just give me a second here, and I will show you the retraces, if I've got it right here. There we go. You basically have 782 or 1782 as the 382, and then 1795 is the .50 retracement in this move. And everybody was screaming last night that it was time to go short. They were going to 1720. And I mean, this is mostly on Bloomberg and market timers. And these are all the same guys that were wanting to go long the day before. So I figured once they turned bearish, that it was probably a good time to look at it. Also looked at the options, and everybody was buying puts and protection to the downside. A good indication that at least short-term levels are back in. I think we can go all the way to options delta neutral day, which is going to be a week from Wednesday. Okay. That is, of course, always the third Friday of the month when we expire, but the Wednesday the week before, the 12th, normally is either the high or the low in that expiration cycle.
Okay.
But I think we're probably going to stumble up, and it's not going to be pretty. It's going to be a little ugly. But if we have light volume continuing and we get 1780, 1785, I'd be pulling the ripcord and getting out of the trade right there. So okay. I think there's a great deal of psychology more than just chart reading out here in the market. I know that we were up, 1758, and we've pulled off that high just a little bit, but probably going to climb back up there. To me, there's probably too many shorts. And one of the reasons I did cover is I had a short on Netflix. I had a short on the in TAN, and it made money, but it wasn't a great deal like a lot of the other positions I had. I was basically 100% short. I wanted to see some of these really high short ETFs and stocks that should have cracked yesterday. They did not. They held up fairly well, which makes me think that at least the people on Wall Street aren't, the insiders weren't freaking out just yet. More the people on TV were. Maybe they were sent there to freak out, make everybody jump in and get very bearish at the bottom, and then, frog boil them for a week and a half, make it a little uncomfortable, and then probably unleash the real selling when it gets back up, or see how much they can distribute. Probably back up in that 1780 level.
Okay,
but, go ahead.
And Dave, thanks for that. So I'll watch for the 1780 level, and you think that will probably occur within the next 5 or 10 trading days?
I think a week from tomorrow.
Okay, great.
So yeah, I think you've got about a week where we could come back up. We're going to be doing a special on how to use options to trade equities, and that's going to be the webinar is going to be the 11th. I think that's going to be announced today or tomorrow, along with some specials. And I've spent about 3 or 4 days writing an updated article that I first wrote in 2004 with a lot of new stuff in it on how to use options. And we'll show how the option cycle works. Anyway, we'll be back in just a minute.
Hey, thanks a lot, Dave.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we were talking, we're going to get into a couple of stocks that were requests from the den. If you don't want to go on the air, you can always email me at path@tfnn.com. I'll try to catch it during the next break or while I'm on the line here if it shows up. Always get emails, but you can call us at 877-927-6648 also. I talk about some things that I enjoy, and one of them is movies. Unfortunately, most of them have ended up being nothing but roller coaster rides with no real script, just how many things they can blow up. I really like it when I see a sweet movie by a new filmmaker and one that has it's kind of lovable and sweet. And I know a lot of people are up north getting snowed in. One of my buddies called from Kansas City last night. We were talking. He says, well, yeah, I'm getting ready to have 10 inches of snow, and I'm looking for some movies. And I said, well, you probably want to pick up one of the ones I like the most is In a World. And if you're familiar with a gentleman by the name of Don LaFontaine, he was that guy that I'll try to do my best imitation, and I know it'll be horrible, but it was always this: in a world where dogs have started to eat cats. It's always some kind of post-apocalyptic, I can't even say it, apocalyptic movie that was like a sci-fi movie or something, and the guy did literally hundreds of thousands of voiceovers over the year, but it kind of looks into the whole voiceover community in Los Angeles, and has a gal that actually starred in it and wrote it. I met her maybe 11 years ago. Her father opened up Virginia International Raceway and invited a handful of racers down here in the Florida motorcycle CSS and Formula USA motorcycle racers to go up there and check the track out when it was brand new. So we went up there and I met him and met his daughter, and certainly a really great guy. She was kind of quiet back then. I just kind of vaguely remember she's on a couple of Adult Swim cartoon kind of things at night, but wrote her own movie and starred in it, and like a lot of these things, just very sweet and nice, and no explosions, and I liked it. So if you're looking for a movie for tonight at Coinstar, get In a World. Now we're going to get back to moving into the markets, and one of the things someone asked about was Boeing, and another good movie coming out about airplane disasters. What is it? Charlie Victor something. I'll look it up during the break. The Boeing company is basically at a buy, except a little bit too heavy a volume when we're looking at it. And, of course, a lot of their planes going to the third world. This gapped up on the 23rd of October with 10 million shares. So you wanted to see less than 10 million shares over the last few days. You had almost 10 million shares on the 31st, a little less than that yesterday, and of course today probably going to come in just a little lighter. Certainly fully filled that gap down, or a gap up from the 23rd of October. So I'd have to say indeterminate. You had a very good sign that this thing had rolled over with the test of the previous high on 50% of the volume. Why, you had a nice short opportunity out here. This is a company that's got orders out the yin-yang, and even if they get canceled now, by the time those turn back around, they'll probably have those orders again. So not one that I'm hot on shorting. Certainly indeterminate. If it would bounce back up to probably the 132, 133 area on this last gap down that came with 16 million shares is where you'd find resistance, and possibly this thing gets up there with light volume, probably making an ABC down. That ABC is what, 24 points. So if you go up to 134, 133, could take you right back down to 110. So let's take a look at that. Yeah, you've got two nice gaps down there. That first gap up on the 16th of, 16th of September, 7.3 million shares. And then your next gap up on the 10th of October with 5.6 million shares. So not a whole lot of strength out here. I'd say you could look at 112 on an ABC down, and you would want to at least get into the 130, 132 range on there for an ABC down. Certainly you had high energy, so this isn't one I'm going to be trying to go back and buy for a retest to the top. It's already done it. It's done it in spades, and probably at least a mid-top is back out in here. If it got back up there, you really had the VIX drop over the next week or so and get down under 15. Maybe you could buy puts on it. But probably the only decent play to make the risk reward on it would be buying puts. So you're going to have to hope that those come back down fairly quick. Another question in the den was to look at Donald LaFontaine. I thought I said that. Anyway, Kohl's Corporation, they're sniffing so much glue back there in the engineering room that I think they lose touch and start playing that crappy music. Just a thought. I'm not there every day, I'm in my own bunker, 10 floors below the surface of Tampa in an abandoned missile silo. But what we can find at Kohl's, certainly this thing just rotten ugly since it has come out with numbers. Everything in retail stinks, and not surprising out here. You wanted to see this 50 level broken with 3.5 million shares from the August 14th low. And what do we get here? 3.6 million shares. So you certainly had that kind of volume over several days as it went through that $50 level that set up the lows from August 14th. So the next thing set up is the $45 to $44 level in this. And some of these retail stocks like, let's look at Best Buy, BBY, just to see. These things haven't bounced. They don't have any real volume coming in, and there's nothing but down for these things. So it is going to be problematic for Kohl's to get back in the driver's seat and anywhere up. If you close back above 50, you'd have a chance on this, but I'm going to say 80% chance you see 45 on this before you see 52. So not a very bullish vision of the future. Okay. So now, and what else do we have? Oh, they're threatening me on the IM for the engineer booth. They're threatening to play nothing but Weird Al Yankovic from now on. I wanted to look at a few more stocks here. These are a few that I was just looking through from the break, and let's go ahead and just check back in and find out what we've got. Okay, we're up 14 points on the S&P cash, 2.7 billion shares. Just wanted to keep an eye on it. There are a few stocks out here that are at highs, kind of interestingly enough. Advanced Energy Industries, AEIS, is one I'm kind of keeping an eye on out here. Even through the bad few days, this thing tried to come back up here and bust out the November 5th high that had 2.2 million shares. And, of course, the last two times we got into that was January 16th with 1 million shares, and another attempt out here at 1 million shares. This thing looks like it's headed back down to the $21 area. Allied Nevada Gold, we're seeing some of these gold companies run in headlong into resistance, and this one's no different. Been watching this yesterday mostly to see how it came back up into this just over a $5 level for A&V. Of course, the heavy volume was on the August 27th high that had 11 million shares at $5.32. Tried to get into it on October 8th. 9 million shares, just reversed right out of it. And, of course, what we really want to be looking at is the kind of volume that we have attacking that high over the next or last few times. And back on the 17th through the 24th of January, about half the volume of that early high with 11 million shares. Yesterday we attacked it again with 6.2 million shares, and the thing pretty much rolled over throughout the day, and not a whole lot of difference between that and what is it, GDX. Let's take a quick look at those and follow those back up. You could be making a case that the GDX is making one more ABC down. You had some okay volume off this low, but if you actually go to and look at possible expansions on this, it's going to be rather interesting. We have retraced almost 60% of the October 28th to the December 23rd low on the GDX. So we've pretty much got everything we were talking about. We also talked about how this $24 level was confluence in most of these gold miners. And the question is, kind of going sideways here. If it started to get weak, what could be the worst scenario for gold? Most people don't want to think about that if they're long gold now, but I think you should always be looking at the highs and lows to figure out your risk reward. One of the things I do see, though, is just a 1-to-1 would take you to $17.52 now. Probably going to be tough to get that, but I think you could actually make a decent case that we could get close to the $20 level back in GDX if gold continues to meander down at these lower levels and doesn't really start catching a bid higher. As long as we're down in this 1200 to 1270 range, a lot of these companies are going to have to come back for additional cash, and it can be quite problematic. The juniors look just a little bit different out here, and that is the 41. Do I have that in here? $41 loan. Yeah, we'll take a look at it anyway. My A, and we'll make that my B, and we'll make that my C up here, Mr. C, and we'll take a look at that. You know, you had, almost a 7-8 retracement on that, which would suggest you're looking at $26. If it was an ABC down, a little bit too much of a retracement in that one. So the juniors would probably look just a little sweeter out here maybe than the bigger ones. Maybe they have to go after more cash out here, but certainly a better one. I certainly like the energy very much on the GDXJ over the GDX. Let's go back and look at that one just one more time real quick. But yeah, the energy on the GDX, a whole lot less than what we had in the GDXJ. So maybe that is because of the amount of cash they're going to have to come after, or maybe the anticipation that they're going to be issuing more shares in some of those. And what else do we have here? Oh, wanted to look at some stocks that are actually bullish. Don't want to be a one note Johnny out here. There is a interesting company called Blue Cora out here, and we'll get into them in a second. Let's look at the actual chart. This thing took off like a rocket, and it is the November 6th day that we're looking at. This thing took off with 3.7 million shares to the upside. And very, very strong day out here. Nothing else you can say. That's exactly what. And it's come right back down and filled that gap today with, well, what do we got? 430,000 shares so far. This company engages in online search and tax preparation in the United States and internationally. The company operates in two segments, search and tax preparation. I don't know how those two work together. Sounds to me like a Reese's cup of company. Are we, it's got Dogpile and webcrawler.com. I don't know if anybody even cares about those anymore. The whole tax thing kind of interesting, but certainly the chart looks good. Maybe this thing will pick up into filing your income taxes, but keep an eye on it. We will be back in just a minute. Give me a call, 877-937-6648. Give me an email, pat@tfnn.com, or post something in the bin for us to wrap the show up. We'll be back in a minute.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
In a world where the success of an industry depends upon the creative ability of a few, greatness must be recognized. The 26th Annual Hollywood Reporter Key Art Awards.
Shall I head directly to the DGA?
No, not yet. First, we have to assemble our team.
Our team?
That was Don LaFontaine, and the movie I recommended just a little earlier. Certainly, if you're looking for something to rent, I liked it. It was very, very interesting. Anyway, what else do we have going on? We got a few people emailing me. We've got Andy circling his wagons in the den, getting ready to take over for us at 3 here. We've got just lately, we've got kind of a murderer's row of huge wins out here at TFNN. Of course, my shorts that covered yesterday, and I think his big coffee trades and natural gas trades. So I feel like we're kind of we're pulling the wagon here at TFNN here in the 2 to 3 o'clock hour over the last few days. Going to be interesting. As we go and close out the door here, I had a question from several people, but one was for you, Gaz, UGAZ, the 3X long natural gas exchange traded note ETF. Of course, a nice gap up there today. The UNG up $2 today, 26.36. So we're getting back up into those levels. Of course, the seasonality is going to come along in natural gas in the next, 2, 3, 4 weeks. Maybe there is a safe way to play going short natural gas, but I have a feeling they'll be able to catch up and fill up all those natural gas wells probably in 2 to 4 weeks. And I think it's probably setting up a nice short in natural gas back for the summer. And, of course, until they really get a few more of these pipelines going, it's going to be hard to get the gas where it needs to actually be going, and that's going to be problematic. But, I mean, we've got a nice little run up here today. We're probably getting awful close to the high of natural gas. Like I said, maybe Andy will look at it for a possible short, maybe a way to get in here and buy one of the options on one of these leveraged ETFs to at least get the risk acceptable for us and be interesting. I remember having a short for a little while at 15.75 on natural gas. A long time ago, the thing spiked. I didn't know what I was doing, but did pull the trigger, and the thing just did nothing but go down. And I got out of it way too early. But I remember that high at 15.75. It had to be 2006, 2007, something like that. All I remember was that it was probably should have lost for just being stupid and being in it. But one of those lucky trades that I had catching at the top. And, of course, the single biggest trade ever by an individual, I think, ended up being a $1.5 billion windfall in 1 year for some trader, and he won bragging rights, I think, for the rest of his life on that. Another question we had was about SoftBank, SFTBY, and I don't know exactly what they want me to look at in this thing, but China, Japan, these guys are just far too involved in all that. Every night we see another 3% down in that area. I don't see this thing stopping until it gets into these two gaps all the way down to 30, and even then it could be problematic. Oh, here comes Andy, circling around, circling. He's taken 3 barrels down. How long can he hold? Anyway, we'll see you tomorrow. Same bat channel, same bat time. Remember, sell when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.